Microstrategy reveals a bold plan in its Bitcoin strategy. U.S. spot ETFs reach a major milestone. And does the dollar have to collapse for Bitcoin to reach 200K? Stick around to find out on this week's Bitcoin News Update. Hi, I'm Nate Martin with this week's Bitcoin News Update. Executive Chairman Michael Saylor at Microstrategy has announced an ambitious plan to raise $42 billion over the next 3 years to purchase yet more Bitcoin. Despite not adding to its holdings since mid-September, the company aims to bolster its reserves through its 21-21 plan, which includes $21 billion in equity and $21 billion in debt offerings. CEO Phong Le stated that the capital will be used to buy Bitcoin as a Treasury reserve asset to achieve a higher BTC yield. Currently, Microstrategy holds 252,220 Bitcoin at an acquisition cost of just shy of $10 billion. It is now valued at over $18 billion. Even after a 10% after-hours dip, MicroStrategy's shares have gained nearly 250% year-to-date. Reports that Microsoft may consider Bitcoin as part of its cash reserves highlight a shift in corporate treasury strategies. While Microsoft's board has advised shareholders to vote against converting 1% of its assets into BTC, the discussion reflects growing interest among public companies in Bitcoin as a hedge and diversification tool, especially as inflation rises globally. Experts view this debate as a step forward for Bitcoin. Daniel Cowrie of Timekeeper noted that even discussing Bitcoin in boardrooms signals its acceptance as a serious diversification strategy. Similarly, Nate Holliday, CEO of Space and Time, emphasized Microsoft's active involvement in Web3 investments, including backing his firm. Though unlikely to invest its entire treasury in Bitcoin, Microsoft's potential gradual approach would add credibility to Bitcoin's role as a strategic asset for corporations. Bitwise CIO Matt Hogan shared on X a question he got from a financial advisor as to whether the dollar would have to collapse for Bitcoin to reach $200,000. Hogan confidently stated, quote, "The answer is no." He outlined two key drivers for Bitcoin's potential move to such a valuation. First, Bitcoin's establishment as a new store of value asset. And second, the expectation that government's continued mishandling of fiat currencies will boost demand for store of value assets. Hogan explained that if Bitcoin matures and reaches 50% of gold's market cap, well, that would make each Bitcoin worth more than $400,000. Or in the case of continued government fiat abuse, if the store of value market triples and Bitcoin just holds its 7% share, well, then its value would still exceed $200,000. Hogan went even further by saying that both arguments seem to be taking shape, which is why Bitcoin is surging toward all-time highs. As further evidence of Bitcoin's acceptance by institutional investors, in less than 10 months, 12 U.S. spot Bitcoin ETFs have collectively acquired over 1 million BTC, valued at nearly $71 billion. Since the long-awaited SEC approval of the offerings back on January 11th, these funds added 1,007,705 BTC. BlackRock's IBIT fund leads the pack, holding more than 429,000 BTC, worth more than $30 billion, followed by Fidelity's FBTC with 188,000 and change, and ARK Invest and 21 Shares ARK B with a little over 50,000 Bitcoin. Together, along with firms with smaller holdings, these ETFs now control 5.1% of all Bitcoin in circulation. And finally, earlier this week, as U.S. Treasury Secretary Janet Yellen was holding a press conference, she was asked about concerns as to the future of the U.S. dollar continuing as the world's reserve currency. And as the question was being asked, the Treasury Department sign on the podium crashed to the ground. Kind of sums it up, doesn't it? That's it for this week's Bitcoin News Update. If you've enjoyed this episode, make sure to leave a like, consider subscribing to the channel, and turn on notifications so you don't miss our next video. See you next week.